Welcome, everyone, to the Information's TITV. My name is Akash Pasricha. It is Friday, February 27th. We have got a jam-packed show for you today. We are unpacking Block's 40% layoffs, and we're going to try to get an answer to the question, was it AI, was it bloat, or was it both? We'll bring on an analyst and an investor to talk about that. We'll also get to the new details that have emerged this morning about OpenAI's $110 billion funding round. This has big implications for Amazon and Microsoft that we're going to get to, along with our exclusive reporting about a Google and Meta AI chip deal that is worth billions of dollars. We'll then bring on two of our top editors to break down Netflix's move to drop out of the Warner Brothers Discovery bidding war and the other big headlines of the week. We're also wading deeper into the world of answer engine optimization and chat with the newest unicorn on that block. And finally, I am sitting down with Dave Moore, the first independent board member of the OpenClaw Foundation, to talk about what is next for the project and how he plans to approach his oversight role. It's going to be a fun show, so let's get right on into it. Block, the company that owns Square and Afterpay and Cash App, shook Silicon Valley with its news last night that it is laying off roughly 40% of its 10,000 employees. CEO Jack Dorsey made a long post about his decision, but a lot of people are still debating what the root causes of these layoffs are and how much of it is AI. I want to bring on Darren Pillar, Managing Director at Wolf Research, and Marcelo Lima, Managing Partner of Heller House, for their thoughts on all of this. Gentlemen, welcome to you both. It's great to have you here.
Thanks, Akash.
Thank you.
Darren, I want to start with you. What did you make of this decision?
Look, I think for some time we've been saying this company was operating a little bit more inefficiently than they should have been. We actually published an open letter to the board back in May of 2025, so almost a year ago already, saying there's a lot of areas they're overspending. If you look at how much in R&D, for example, they're about 11 percentage points higher than the industry and how much they spend on R&D as a percentage of gross profit. And so from our perspective, there was an overdue cut needed. We'll talk more about this, and I'm sure Marcelo has similar views to share, but considering the amount of heads they're cutting, a normal trajectory would have allowed them to be about 7,000 to 8,000 FTEs right now, maybe 7,000 by the end of 25. They're cutting down from 10,000 to 6,000. We estimate most of that is coming from just overall bloat and expense that was mismanaged. And now they're catching up with another maybe 1,000 being AI driven.
Marcelo, what are your thoughts here?
Yeah, I agree with Darren. I've been following this company for many years and have been communicating with the management team in 2022, 2023, and 2024 that their margins were way too low. So, if you look at global comps and how much they generate in gross profits and how much they generate, how much of that drops down to the operating margin line, it's Block is still very much underperforming even after this reduction in force and their guidance for 2026.
What was the response from management, Marcelo, when you tried communicating with them? You were shareholders, you sold your shares. What was the answer that they gave you?
Mostly crickets, unfortunately. So very, very little engagement. And seems to me, Jack is a brilliant product guy, obviously visionary, but people who have been following this company know that it was, and Twitter, frankly, was not really run for the benefit of shareholders.
Talk more about that. What do you mean?
Well, as you know, Elon came and laid off 80% of Twitter's staff and found a bunch of things like the catering in San Francisco was $400 a plate because nobody showed up. They had furniture stored in Class A office buildings. There was a number of stories of SaaS products that they had signed up for and never actually even logged into. So they were paying for all the software they weren't using. And I think there was a party at Block now recently that was $68 million or something like that. So Jack in effect threw a party for his staff and then fired 40% of it.
So
I'd like to jump in, Akash.
Yeah, Darren, go ahead.
I'll just add on to that. When we published that open letter to the board and to Jack, basically saying there's areas of efficiencies you can find, their response to us was, look, we have engineers that are more expensive than the average company. We put a chart together, which is in a note we published, that shows that of all of the names in fintech and payments that at least we cover, They're the second highest spender on an OpEx per employee basis. They spend over $550,000 on an average per employee, which is somewhere around two times the median for the space. And their response was they're expensive employees, they're engineers, but there's a lot of ways to handle high cost headcount, specifically offshoring and maybe now with AI as well.
So, Darren, let's talk about the AI element here. I mean, this is the debate. Was it AI? Was it bloat? Is it both? And I think I sort of land somewhere in the middle where maybe AI could have gotten you somewhere, but there was all this overhiring. But Darren, maybe this goes back to what you were saying, the normal trajectory, if the company was going along this, what would an AI cut have looked like? How much savings could that have been for the company? I mean, he's putting out this figure, Jack, in his tweet saying we're targeting $2 million per person in gross profit. That's the target we're going towards. Was AI going to get them there? What do you think?
I think that I did touch on this a little bit before, but I do think that the trajectory of their headcount growth in a normal mature company manner would have gotten them to around somewhere in the ballpark of around 7,000 FTEs by today, instead of the 10,000 that they have now, suggesting that let's call it three of the 4,000 cuts really were because the company should have been more efficient, as Marcelo was alluding to, as well. And I think that the final 1,000, the incremental 1,000 above that, getting them to the 4,000 they're cutting, probably is related to some some efficiencies they're now finding using AI. We'll see how this impacts the business. They've been testing this now, whether it's their own Goose products or programs, or it's Autobot or bots they're working on right now internally to help. But when it comes down to it, I think it was probably two-thirds to three-quarters related to overspending.
Marcelo, do you think this sets any kind of a precedent for other companies to make similar cuts of this size? And by that I mean, so Darren just walked us through his numbers, right? I mean, there is the truth of the matter, but then there's the narrative, right? Is that companies can do these cuts. Marcelo, do you think other companies will latch on to this narrative?
I think they already are. I think I saw recently C3 AI and eBay doing reductions in force. I think the reality is, if you listen to how economists talk about jobs, they are bundles of tasks. And so people do a number of different tasks. Some of those tasks are being automated by AI. There's no question about that. I use Claude Code all day. I use Claude in Excel. It's fantastic. Really accelerates my work. But that means I can do other types of tasks that I wasn't doing before. I can accelerate some of my other tasks and do them more efficiently. Everybody, I think, in the knowledge economy and the work in the white collar space has to now harness these tools and improve their productivity. Otherwise, I think companies will have a now political cover to do these types of reductions in force.
Darren, what do you think?
I think it depends on the types of companies that you're talking about. Truth is, I think there are going to be efficiencies found. We're seeing it, as Marcelo said, and other names we talk about that are already calling out, nothing to the degree of this headcount reduction, but call it anywhere from low single to high single digit percentages of expenses being found where they can take it out. That said, I also think that the efficiencies that it's driving is also allowing these companies to level the playing field from a competitive standpoint with many others. Um, Frankly, depends on the industry though. Payments and fintech, which where Block sits, it's going to benefit from saving money, but I don't see a lot of disruption in terms of the actual category, given how much regulatory money movement is required that really can't be replaced by AI. And so the market's really kind of beaten up quite a few of the sectors all as one. And I think it should be a little more specific than that, with some names within payments having been oversold and everything.
Darren, very quickly, I mean, this was the big news last night, the reduction in headcount. Obviously, they released their quarterly results as well. And I just want to get a quick picture from you on how Square, Afterpay, and Cash App, how each of those businesses are doing. I mean, if you look at their top or their net revenue, that's basically flatlined. The gross profit has been coming up. Help me understand how that's possible for a company like
Yeah.
this.
You got to remember their net revenue incorporates crypto trading, and there's a lot of, pass through costs. And with volume on crypto down, that's going to impact net revenue. But by the time you get to gross profit, that's really their true way we look at their top line. And that's been growing well. So look, Cash App grew over 30%. A lot of that has to do with Cash App Borrow. They're giving more credit out, but it's still doing very well in terms of user growth. And more people are using them and other companies like Chime for neobanking. And the Square, the merchant side, they've been adding quite a few salespeople, which is where they're going to reinvest some of these AI savings or just headcount savings overall into sales and go to market. That business is accelerating and it's expected to grow volume by 12% up from 10% in Q1. So they're showing pretty good traction overall on the top line at least.
And any confidence on the bottom line after this move, Darren?
Listen, if you there's a lot of numbers that investors are throwing out to us right now in terms of the magnitude of upside. They effectively raised their bottom line, their operating income targets by $500 million. So it went from 2.7 billion to $3.2 billion, about a 25% margin now, up from what was around a 20% type margin last year. The reality is there could be more upside depending on how much they're paying a lot of these heads. You could see numbers that are $500 to $600 million, even $1 billion better than that by the time we get to the end of 26 and into 27. So there really could be and should be for that reason, for pricing reasons we've talked about, and for just overall top line growth reasons.
Marcelo, what would it take for you to get back into the company? Would you at all consider buying now?
The big question is, have they really found religion and changed their thinking on creating shareholder value? And then the other question is, what's the terminal multiple of this business? I sent an email to them almost 2 years ago to the date, which I posted on Twitter, and I was using a 25 times earnings multiple for my exit multiple. And I noticed this is what the IRR is between here and then, assuming that you deliver on these EPS numbers. Now, what they've promised for 2026 is just shy of what I had outlined in my high case for 2026. I had $4 in adjusted EPS. They're delivering, I think, $3.66. There is a lot more room, as Darren said, to expand that for sure. But then the question is, does this trade at a PayPal multiple, in which case, the stock could go a lot lower, or does it trade at a higher multiple? I think that's the big question here.
And what do you think? Is it enough to change the religion, Marcelo? What do you think?
Personally, I have a hard time believing that the management team that has been doing this for so many years to shareholders has suddenly changed their stripes. I'm not buying it yet.
Great. Well, Darren and Marcelo, I want to thank you for coming on. That is Darren from Wolf Research and Marcelo from Heller House here on TITV. OpenAI announced its $110 billion funding round this morning. That was news we have reported on extensively at The Information. The more interesting part of the story is the makeup of the different cloud agreements that OpenAI has struck with the different cloud providers that are participating in the funding round. Joining me now to discuss all of this is Anissa Gardisi, our cloud and compute reporter, and Aaron Holmes, our Microsoft reporter. Welcome to you both. It's great to have you back.
Thank you.
Okay. Aaron, I want to start with you. We got big news this morning. We got the funding round. We got the cloud agreements. There's OpenAI, Microsoft, Amazon. Break it all down for us. What do we need to know?
Yeah, so I mean, today the big news is that OpenAI and Amazon announced that Amazon will be committing $50 billion in funding to OpenAI, which is part of this bigger $110 billion funding round that also, has NVIDIA and SoftBank participating. And specifically, we're seeing that Amazon and OpenAI, as part of this, are getting even closer. They announced that OpenAI is going to be using Amazon's Trainium chips for training its models. And they also announced that there's going to be a bunch of new products that they're working on together that will have, OpenAI branding and that will run on Amazon's cloud, which is a bit of a departure from, the status quo up to now, in which OpenAI has only been available on Microsoft's Azure cloud. The nuances of how that's actually going to work are pretty complicated, and the models themselves are still running on Azure's cloud. But the fact that there's now going to be, OpenAI products on Amazon is, in some ways, a big win from Amazon, especially from a marketing perspective.
So I don't want to get into all the details, but some of them. So the models are running on Azure, but they're going to be branded with AWS.
Yeah, so it's a very kind of complex topic. Essentially, Microsoft contractually has the rights to run OpenAI's models on Azure, and the models themselves cannot run on any other cloud. So what we're looking at is Amazon and OpenAI are now saying they're going to collaborate on products that look like, AI agents or applications that could remember a specific customer's context, like their name and the name of their company, their data. That context will sit on AWS. But when the application needs to actually use the AI model to think and to do all of the things that AI models do, it'll be making calls back to Azure and essentially spinning the meter for Azure at the same time.
So different parts of the operation are on different clouds. My question for you, Aaron, and then Anissa, I'm going to come to you, is why do you think they did this deal with Amazon? I mean, is this a better offering? Is it them trying to diversify their bets? What do you think the logic here is?
So OpenAI needs a few things from Amazon. They definitely need the cash that Amazon is willing to contribute. Microsoft, meanwhile, still has not decided if it's going to participate in this round, according to a source there. But they need the cash. They also, need more computing power to train and run their models, and Amazon is going to provide that capacity with Trainium chips. And then what Amazon gets out of it is essentially they get to, put the OpenAI banner on AWS and say, we are a cloud provider that works with OpenAI and we have OpenAI applications running on our cloud, even if the models themselves don't. So I think in that way, both of the companies are getting something out of this.
So, Anissa, you've reported extensively on Trainium, which is Amazon's chip. And I'm curious, is this a vote of confidence for what Trainium can do? Is it better at handling any of these workloads than, NVIDIA? Or, I mean, we're going to talk about TPUs in a second, but is there something really good about Trainium here?
So that's exactly what Amazon wants customers to think about Trainium chips, which is why I think the Trainium chips were such a big part of this announcement. I think the thing for people to know about, OpenAI using Trainium is that was always on the table for Amazon as they were negotiating this large investment into OpenAI. Actually, when we first reported about Amazon potentially investing more than 10 billion into OpenAI, we knew back then that Trainium chips were part of the conversation. So, I mean, I think there was no way that Andy Jassy was going to make a large strategic investment into OpenAI and not have a Trainium component. This is very common for cloud providers to do when they announce big cloud deals, is get the customer to use their custom silicon. Now, NVIDIA also is in this giant OpenAI round, and OpenAI will be using a lot of GPUs from NVIDIA on Amazon's cloud. So, it'll be a good test of the Trainium chips, but I do think that is something that was not surprising from the Amazon side.
Right. In other words, it's not an or, it's more of an and type
Exactly.
of agreement. Aaron, what does this mean for Microsoft now?
Well, we saw Microsoft come out with a statement today, essentially reminding the world, like, we are the only cloud that can serve OpenAI's models to developers. That hasn't changed. And also saying that, even if Amazon and OpenAI build this AWS version of OpenAI's Frontier app, there's still going to be a version available on Azure. So I think, Microsoft, from their perspective, they are still able to capture the market for developers who want to build applications that use OpenAI's models, which has been a very lucrative, multi-billion dollar business for them so far. At the same time, they do lose a little bit of the sheen of exclusivity that, in the past, anything OpenAI related whatsoever, you had to go through Azure, and now you can have at least parts of that stack live on AWS, just not the models themselves. So it's a slight loss from them, I think, mostly from a branding perspective, but they do still get to capture all of that model revenue.
Anissa, I want to pivot to a different story, a related story, but you reported this week, along with our colleagues in the Asia Bureau, that Meta and Google have signed their own multi-billion-dollar deal. Tell us about what you found.
Sure. So yeah, while OpenAI is signing this deal with Amazon and talking about Trainium chips, we reported this week that Meta just signed a very large deal with Google, in which Meta will be using Google's AI chips, which are called tensor processing units, or TPUs. So we had known that Meta and Google were talking for a while about a big TPU deal, and as you know, Meta also has done big announcements with NVIDIA and AMD. But this one is really interesting because Google has been trying to get its TPUs into the market. They already have Anthropic as a big AI customer, and now Meta is going to be using the TPUs in a big way.
And now you just explained to us what the Trainium chip was good for. Is there something here on the workload side that TPUs are really good for that Meta would turn to them for?
People are really excited about the TPUs, mainly as a viable NVIDIA alternative. So there's been a lot of excitement around TPUs potentially being less expensive than NVIDIA GPUs at certain AI workloads. The thing is, Google and NVIDIA both have to deal with supply constraints. So that is obviously, a major constraint on Google's end in getting TPUs into the market. But Meta is kind of taking a multi-chip strategy here. So they're not exclusive to NVIDIA, and obviously with the AMD deal, they're looking around for other options. But the way Google pitches it is that TPUs are just as good as NVIDIA chips, and they could be cheaper. Which we'll have to see exactly if that's true and what discounts people have, of course.
Aaron, I want to step back here quickly and just look at the significance of all of these announcements in succession. I mean, this is a story we've been talking about. When will people diversify away from NVIDIA? What are the other alternatives? Will the hyperscalers chip efforts finally pay off? This seems like finally a point where, I mean, you've got Amazon and Google; their chips are finally getting used in a big way. I don't know that anyone would argue this is bad news for NVIDIA because we just saw that they posted monster earnings this week. But what does this tell you about the chip story overall?
I think that one thing that's interesting about all of these chip deals is that they do tend to, with the exception of Google and Meta, they tend to come in tandem with funding rounds. I think OpenAI specifically is one customer that, Microsoft won originally as a customer by investing billions of dollars at once into. We're now seeing Amazon win OpenAI's business in tandem with a $50 billion investment. And I think we have seen, investors and shareholders in Amazon and in Microsoft questioning whether that is sustainable and whether, OpenAI is a customer that will be durable and will stick around even after these, investments are long in the rearview mirror. I do think it's really interesting that we're starting to also see companies like Meta turn to Google. I think that the big question for the entire cloud industry is just, how long this acceleration in demand for training jobs among like the AI labs, the companies building AI models will persist, and if that'll continue to diversify. So far, it's looking like, yes, there is enough demand and, enough competition between different chips that these newer chips are starting to take off in meaningful ways.
And Anissa, I mean, one thing that is also interesting to me is it also shows us whose chips efforts are actually working, because we had another story this week that Meta was also thinking about designing its own chip, and really that effort seems to have fallen apart in some ways.
Exactly. Yeah. Our colleagues Jyoti, Wayne, and Channer wrote about how Meta is shelving plans on its advanced AI training chip. Now, I can say, like, from industry sources, the Meta training chip program was always seen as maybe the first in-house silicon project that maybe wouldn't be successful. But I do think this is, all of these announcements are putting pressure on in-house chip development efforts when you have giant companies like NVIDIA making their chips, you know, orders of magnitude better year on year. It's very hard to have a competing chip internally. I think, people think that in-house chips are going to be very useful on maybe specific Meta workloads where Meta can, make a chip for a workload that is very core to their business versus Meta making an AI training chip that is as ubiquitous as an NVIDIA GPU.
Right. Well, Anissa and Aaron, I want to thank you for coming on. That is Anissa Gardizzi, our cloud and compute reporter, and Aaron Holmes, our Microsoft reporter here at The Information. Netflix has dropped out of the bidding war for Warner Brothers Discovery after duking it out with Paramount for months after it made its initial bid. This week on The Editor's Cut, I want to unpack that news and also some of the other big stories of the week. We are bringing on Martin Peers, our co-executive editor, and Nick Wingfield, our features editor. Welcome to you both. It's great to have you back.
Hey, Kash.
Hey, thanks for having us.
Okay, Martin. So you you kind of called this. You said Netflix, was this really a serious bid at all? Were they going to drop out? Walk us through your calculus here.
I mean, I think it was serious. I think that I don't think they would have gone through this much trouble just to sort of be a stalking horse and just to make life difficult for Paramount. But I think they definitely made the right decision. I think now the story will move to Paramount. Um, I was looking this morning at the Paramount fourth quarter numbers that were released this week. That company's revenue declined last year. So here's a company which is overseeing a declining business. It's about to take on a massive amount of debt to buy another business, which also reported this week that they were declining. The Ellison family is putting in tens of billions in equity. They've already committed, several billion to Paramount. The risk that they are taking by combining these two declining companies is enormous. So I think Netflix is really lucked out, and you can see that by looking at the stock price, which has just moved up on news that Netflix is out of this thing.
Nick, I seem to recall when the three of us were on here a couple months ago, weeks ago, I don't know. I mean, we were talking about what it would mean to both companies. I think you seem to be, more in the camp of Paramount might make a little more sense, if any sense at all.
Well, yeah, I mean, I think that, as long as they don't mess with the pit, that's really what this comes down to, which I was watching last night on HBO. That's what it's all about at the end of the day. I mean, we'll see. There's a lot more overlap between these two companies, so I think the implications for Hollywood are going to be really interesting to watch. Netflix's argument, of course, was that there was less overlap, in terms of theatrical and things like that. But I mean, Martin is more of an expert on this than I am. But I think we're likely to see some, if this deal goes through, some pretty serious implications from a workforce standpoint for the combined company.
And one area which I can tell you reporters will obsess about, because reporters like nothing more than to write about their own industry, is that CBS and CNN will end up being combined. So I guarantee you that this is going to produce reams of coverage that will dwarf anything else. That's a fairly small part of this whole thing, but it will be important, and it's probably important for Paramount's ability to get this approved, because I'm sure Trump would like CNN to be owned by people that he considers friendlier to him.
And Martin, I mean, just talk a little bit about what that means for the media landscape at large. I mean, you have these two networks. If they come together, I mean, what does that say about the media? Was it inevitable? Just talk
When
a
you
little.
say media, are you asking about CBS and CNN?
Yes, CBS and CNN. Yes, yeah.
Well, I mean, look, those are both declining assets, so it makes sense that you would put together businesses that are declining, and hopefully you can cut some costs and make it more, profitable. It's not ideal for the news industry, but that is the way things are moving.
And last question for you on this topic, Martin. Just on the antitrust component here, the government review. How much of a risk is there that this gets blocked, or does it matter on what the plans are?
I don't think there's much risk. Paramount announced the other day they've already secured one of the approvals that they need. So my guess is this is going to go through. Yeah, I mean, I think the real question now is how Paramount can handle the cost, because, as I said, they have to take on a huge amount of debt. So there's going to be a lot of cutting that goes on.
Right.
And Warner has already been going through that over the last 4 or 5 years. So it's not going to be fun.
Nick, one of the other big stories this week, and there were many, but the standoff between Anthropic and the government has been a story that everyone has watching. Walk us through a little bit of what you've been paying attention to in this story, and what the most interesting parts are for you.
Well, we've kind of seen this drama play out between the Department of War, the Pentagon on the one hand, and Anthropic over the past, I don't know, 1 to 2 weeks, where the Department of War is demanding that Anthropic sort of hand over its AI technology with no restrictions on the Pentagon's ability to use it in warfare. Anthropic is among the AI labs out there the most has the most is the most outspoken, shall we say, on safeguards. They don't want their technology used in mass domestic surveillance or for autonomous weapons. Now, there's a deadline tonight that the DoW has established for for Anthropic to kind of agree to its demands, and if it doesn't, it's threatening all sorts of crazy implications, including that basically Anthropic's technology would be banned from or declared a supply chain risk, which would have some pretty serious implications. The news hot off the presses here is that OpenAI also is basically drawing a red line in the sand and saying they too have some concerns about how their technology would be used. And as we report today in a story that just published, not only is OpenAI concerned about it, but Google probably will also have some concerns. Certainly, there's discussion internally and employees advocating that the company take a stand similar to the one that Anthropic's taken.
And so, how do you think this inevitably plays out? That now that other players, other than Anthropic, are starting to voice their concerns, what's your best guess on how this plays out and what the reaction is from the government?
I mean, it's it's tough to say. I mean, on the one hand, Anthropic's technology seems really good, and the Department of War wants it. So you kind of wonder if the two sides might not reach some kind of compromise, or at least start to communicate a little bit better about how Anthropic's technology might be used in kind of warfare settings. It feels like, I mean, first of all, there's bad blood between Anthropic and the Trump administration that predates what's going on with the Department of War, and you get the sense that maybe this is partly about that. It's not just about this specific thing, but there's this sort of accumulation of bad blood between the two sides. Maybe the two sides just sort of cool off. Department of War realizes it needs Anthropic, and they come to some kind of agreement. I mean, but it could get really ugly. I mean, that's the other thing, and all bets are off for what that might mean for Anthropic.
Well, Martin, the thing that I've been thinking about is this is kind of interesting because we have Anthropic and OpenAI who are very much rivals here, and the two CEOs they won't even sounds weird to say. They won't even hold hands in public gatherings where they're asked to. But the unity here of the AI sector against this, I think, is something noteworthy here. I think.
Right. Well, I think all of them need to be able to hire the engineers, and I think it's the engineers who are the ones who, went to work for AI because they wanted to, find cures for cancer or other good things. And I think they don't like the idea of using AI for killing people. What I'm surprised about is that I wouldn't have thought anyone would believe that the AI was reliable enough to be used for those kind of purposes, which seem to be an issue that maybe will get some discussion in the next few days.
Nick, last question for you. Have we seen any conflict like this play out with other types of technology? I mean, I'm thinking about, the cloud sector and when that was coming into fruition. Certainly the internet as a whole. I mean, have we seen any version of the story play out before?
Well, it wasn't that long ago that there was a big movement inside Google over this is kind of the 2018 timeframe, if I'm remembering correctly, over something called Project Maven that was kind of a precursor to this debate. And basically, Google backed off and decided not to renew a contract with the Pentagon over that. Employees were very animated about their feelings. They didn't want technologies they were working on to be used in kind of these war settings. And
And since then, I think we've really seen, for a variety of reasons, a shift in the balance of power away from employees inside technology companies, employee activists specifically. We've seen companies, employers being much more resistant to, petitions, protests, things like that. But the tension really hasn't gone away. There's still plenty of strong feelings inside these tech companies among the workforces about how their technologies are used. And Anthropic is really, kind of carrying that torch forward. So I don't think we've ever seen a showdown like this exactly between a government agency, a government department, and a tech company. So that's really unprecedented.
Great. Well, Nick and Martin, I want to thank you both for coming on. That is Nick Wingfield, our features editor, and Martin Pierce, our co-executive editor here at The Information. Switching gears now to another pocket of the AI sector, there is a new AI advertising unicorn on the block. Profound, a company that helps brands show up better in AI chatbot results and also study how they're showing up at present, raised at a $1 billion valuation. Joining me now to talk about where he hopes to take the company is James Cadwallader, co-founder and CEO of Profound. James, welcome back to the show. It's great to have you here.
Yeah, good to see you. How's it going?
It's going good. You had a good week. Congratulations.
Yeah, I'm always slightly hesitant to over celebrate the fundraising stuff. I feel like we are, very much in the arena, up the mountain. It's like back to work now, but yes, it's good. Happy to celebrate a bit of progress as well.
Great. Well, okay, so let's talk about the business traction then. If we'll put the valuation aside. We had you on 6 months ago. You had just finished a fundraising round then. Tell us about the business traction you've gotten in the last 6 months. How much revenue are you even at right now?
I'm not able to share revenue numbers, but look, listen, it's going really well. I think this is one of, if not the biggest platform shift in the history of marketing. I think in the future, and the not so distant future, that every marketer on the planet is going to care deeply about how AI talks about their brand, products, and services, and they're also going to use AI and agents to do better marketing in that same future. And our platform, Profound, speaks to both of those predictions. And yeah, we only launched 18 months ago. You're correct. Sequoia Capital led our Series B in the summer of last year. And yeah, Lightspeed Venture Partners just led a $96 million Series C at a $1 billion valuation. But really, yeah, it is a reflection of the growth that we've seen. We now work with over 10% of the Fortune 500, some of the biggest companies on the planet. We have thousands of marketers relying on the software that we built.
And so they're using your software to basically study how their brands show up at present in all of these chatbot results, and then you're offering them ways to basically improve how they show up. Is that right?
It's a good question. Yeah. So I think when we announced the Series C this week, it was really to celebrate the launch of Profound Agents, and that speaks to the second part that you mentioned. So really, what happened is we began as a platform, really with the idea of like, okay, let's pull back the curtain and help big companies understand how AI talks about them and how AI surfaces their brand, product, services. So if I ask, ChatGPT or Gemini, what's the best CRM? Does it mention HubSpot? Does it mention Salesforce? What does it say? How frequently does it mention them? But what we found over time is, and it was a good thing, we had huge, enormous market pool, and we became the category leader there. But what our customers were doing is taking all of that data and all of the rich insights from our platform and then using like content orchestration and content automation tooling as the sort of next part of their stack. So what we've now done is folded that all into Profound. So we've essentially built a second startup in the last 3 months, which we've coined as profound agents.
Right.
Agents,
And the idea here being that it's not just how people view your results in the chatbots, it's how agents are perceiving your information and your company basically on based on what's on the internet.
yeah, it's kind of both. So I mean, it's being able to build. Our view is that when you have all of these rich insights, the next thing you want to do is that there's no silver bullet. There's the thing you need to do is do marketing. You have to
Yeah.
you have to create high quality content and distribute that high quality content, and you need to speak to the long tail, which platforms like ChatGPT like to pull from the long tail of the index. And yeah, the way in which we suggest the modern day marketer can do that is by building and customizing their own agentic workflows that can draw from the data and help them create content, do better reporting, and basically do more with less.
And so if I hear you correctly, you're basically helping you're telling your customers you should be using agents to create that content and create it in real time that is customized to different customer profiles or different uh, different agents that are browsing the web type of thing.
It can be, content creation, but also analysis. We've built, let's say, super intricate agents, for example, that do extremely complex competitive analysis in our platform. So really the beauty of Profound now is it's this workbench where you can customize agents to your business needs, and kind of really, it's really an accelerant. And the point I'd make, and I think this is the same tune as a lot of companies and different categories of AI, at the application layer, is that it is still very much human in the loop. We celebrate the marketer. We think there's a birth of a new marketing profile, which is the marketing engineer. And I think the marketing engineer will utilize a workbench like Profound to build, customize, and deploy hundreds, maybe thousands of agents that help them do better work more efficiently.
Now, since we had you on the show last, we have seen the AI labs introduce advertising into their platforms, or at least move closer to it in many ways. And I wonder if you think of advertising. So if I'm a brand and I'm choosing to invest in advertising to show up in ChatGPT, I mean that's one way that I could get my name out there. The other way is investing in a platform like yours, which is optimizing the ways in which they sort of naturally show up in the answer engines. Do you see these two paths as competitive? In other words, are you competing with advertising dollars and saying, don't do the ads, do us, we're actually a better ROI?
No, I see it quite the opposite. Absolutely, as complementary. So I think if you look at any marketing team on the planet, they have paid strategies and organic strategies. That's been true for decades now. And frankly, I believe at some point you will build likely, we'll have ads functionality within Profound as well. So you'll be able to build advertising campaigns within Profound for these generative platforms. So really we see ourselves as a workbench for the whole stack. I think in the future, marketers will need incredible technology to win. And my view is that across the marketing org, marketers will rely on Profound to do their work.
Do you have a timeline for the ads products at all? That sounds pretty exciting.
It's in the oven, so it's like there's
Okay.
calories,
In the oven.
calories.
But the
being
oven's
burned.
on. That's the point. The oven is on.
Yeah, it's happening. Yeah, as we speak, downstairs.
Great.
I sit here in Manhattan, dialed in from Manhattan, and as we speak, there's engineers working on it. Yeah.
Great. Well, James, I want to thank you for coming on. That is James Cadwallader, the co-founder and CEO of Profound here on TITB. OpenClaw took the world by storm a few weeks ago, and its founder, Peter Steinberger, made big news in joining OpenAI. It was announced last week. In many ways, the OpenClaw story is now only going to get more interesting, and at the center of it is a new foundation overseeing the project. I want to bring on Dave Morin, the founding independent board member of the foundation. Dave, welcome back to the show. It's great to have you here.
Always good to be here. Thanks for having me.
I can always count on you to be wearing timely hats. It looks like you've got the claw hat on.
I did that for you.
Well, I was going to say you got a pretty good supplier too, because last time you were on with Ty, and we were saying that you needed a try your best hat. Now you got the OpenClaw hat, and I know you got a black hat too. So, anyway, all right, let's talk about the foundation. So, before we get into what the foundation is all about and what your role is, I mean, look, these tools change so quickly, and I feel like so much could have changed since the early versions of what OpenClaw was and what it is today. So tell us, what are you able to do with the tool today, and how has that changed over the last 2 weeks even?
The last 2 weeks have been largely focused on security. So there's, obviously hundreds of thousands, if not millions, more people using the product. And security is a major component of what we're doing. And so most of the effort over the last 2 weeks has really been on hardening security, improving performance, adding more models, and just listening to the community, and also trying to get more people on board. We've added a couple new maintainers, things like that. So really, the story right now is that overwhelming demand. It's now the second largest open source project on GitHub, larger than Linux, and so just trying to keep up with the storm.
And so help me understand what role the foundation plays now in all this. What are your priorities, and what is your role in all this?
Yeah, I mean, the foundation's role is to protect the project, enable the community, enable stability. Now that this has become such a large thing in the world that we live in technology, it's important that it has resources to, continue developing the open source project, get more maintainers involved, empower the ecosystem. That requires just a lot of little things. And importantly, have just an unbelievable amount of people that want to help out. And so the foundation ensures OpenClaw's independence, regardless of where Peter works or who else is involved. We want to kind of be a Switzerland of AI.
What does the community want to do with the tool? Like, if you were to sort of think about what the roadmap is to further develop it, I mean, what are some of the ideas that people have on how to make it better? And walk us through sort of what your game plan is for the next year.
Yeah, I mean, I think that there's a lot of one of the things that's been a big focus the last couple of weeks is that, OpenClaw is your personal AI. It should be yours. And one of the things that we've been trying to explain to people is that this is not designed to be a multi-user game. There's a lot of people using it in a multi-user way. And one of the problems with that is that if there's multiple people collaborating with the same bot, the bot will respond to anyone, and there's no privacy. You can try to set up the rules so that it maintains different communication with different people, but the architecture of OpenClaw was designed for one person, one bot, and so that's one thing that has been going on quite a bit. I think that the longer term roadmap we'll talk about more as the storm quiets down a little bit. But right now, it's just focused on security and making what's there today much better and much more secure.
What was your reaction to the bigger tech companies? I mean, some tech companies have sort of banned it; they've blocked access to it. What's been your reaction to it?
I think that's it's reasonable that the bigger model companies, they want to know who's using API keys. You're seeing this play out across the ecosystem. I mean, you're even seeing this play out on X, right? Nikita over at X has been talking a lot about understanding who on X is a bot, who is not, right? And I think that's going to be a huge conversation over the next year. And so I think that's mostly what we're seeing. We're seeing that people really want to understand what's using an API key or a token. There's been a lot of kind of nuanced conversation about like, why can't I use my Max subscription for this or a token for that? And it seems that the model companies have a very reasonable position on this, which is that they want to know what's using the tokens and why. And so our perspective is like, that's fine. And, as time goes on, we're going to figure out better models for this, and it's just a little bit of bumps in the road right now.
One of the things I wanted to get your take on is the adoption curves of these technologies, and you've seen a number of different versions of software play out in terms of adoption, going from just early users to really getting uh, everyone using them. And I can't tell if today with a tool like OpenClaw, I mean, it comes out. X, as you mentioned, X is noisy. People get loud about it. They're proud about it. They start posting about it, and on the surface, it seems like adoption is happening faster because people are making so much noise about it. I can't tell if that's actually the truth of the matter, and if new tools are getting adopted faster compared to, I don't know, a decade ago, or I mean, is it really just just the case that people have a place to talk about it that's a little noisier now?
Yeah, it's a really good question. I mean, I think one of the curves you can look at is the GitHub stars. The number of GitHub stars that happened on OpenClaw is literally a straight vertical line.
And for people who might not be familiar with it, just walk us through quickly how valuable is a GitHub star?
Well, GitHub is the place where all of the code is, people keep the code that they share with others in the open source community. It enables people to download the code, run it themselves. It's what enables you to download OpenClaw onto your Mac or whatever computer you want to run it on, and use it. And so there's also the possibility that you can download that code and improve it, and then suggest improvements to the project to add them. And when people really love a piece of, a project, they give it a star on GitHub. And you can also look at the number of downloads of the project. There's a bunch of different, metrics on GitHub, but the speed at which OpenClaw went to the number 2 project in the world is unprecedented. And so it suggests not just that people are looking at this, but they're actually using it and improving it. And, I don't know the answer to your question. Like, is that because the internet is global and, we've got always on X and, live streaming technology TV to talk about this stuff? I don't know. There's probably some element of that, but I also think that the way that these things go truly vertical like this is because they're great, and
Yeah.
because people tell each other about it. And that doesn't just happen through the internet, but it happens, word of mouth and person to person, and people telling each other, hey, this is the best thing that I've ever used. I mean, that's the reason I'm sitting here with you.
Right.
I was, really inspired by this. And so I reached out to Peter late December, early January, just to tell him how much I appreciate what he built, And so
So you guys didn't know each other before
No.
he released it.
No.
Wow. What was so you just told him, you said, I want to be involved, and he said, sure, come on.
It was-
What was it?
It was less I want to be involved and more I just genuinely appreciate what you've built. This is the first time that I felt like I've been living in the future, maybe since the LAMP stack in the early 2000s when, we built a lot of the early web software, or maybe the iPhone. Like, it was out of genuine respect and gratitude. I've not had this much fun building things in a really long time. And so that's what started the conversation.
I just want to go back to the adoption piece because I think, just to sort of extend it, I mean, I think the GitHub star example is interesting because this really means that, the early adopters, the developers, I mean, they clearly are using these tools faster, and you can look at the arc or the slope maybe of that line as one proxy for that. But I mean, the broader question I have is the pace of adoption of new software as a whole, broadly speaking. I mean, do you think that is going to be any faster today than it was 10 years? And I'm talking about, people who don't have any developer background. I
The
mean,
numbers would suggest yes, right? ChatGPT was the fastest growing consumer internet app in history, right? Like, there's many charts. I don't have charts that I can throw up right now, but you can look at the you can look at the chart of ChatGPT's growth versus Instagram or Facebook or Snapchat, and it's it far exceeds the adoption of those other applications in different eras, right? And so it suggests that the consumer demand and the developer demand, and by the way, the investor demand for AI as a technology is much more meaningful than any prior technology that you and I could sit here and come up with in our heads as we talk.
So last question for you. Peter is now at OpenAI. What can you tell us about what you think what OpenAI and Peter are going to be working on together, given his expertise?
Well, I think those questions are for Peter. But what I can tell you is that OpenAI has been, very supportive of the foundation, and the process so far has been lovely. And so, I think we're all just trying to figure out how this is going to work out together. And it's great that they were open to supporting this as an independent foundation. I think this is really the lamp stack moment for AI. I and the foundation are just really focused on making sure that this open source project stays safe, protected, and that we empower like a massive software ecosystem on top of it, that people can build businesses, people can venture capital can invest, and this turns into a beautiful ecosystem.
Great. Well, Dave, I want to thank you for coming on. That is Dave Morin, the founder of Offline Ventures and the first independent director of the OpenClaw Foundation here on TI TV. That does it for today's show. A reminder, we are on this stream Monday through Friday at 10 a.m. Pacific, 1 p.m. Eastern. I want to thank you all for tuning in. We really do appreciate your viewership. Make sure to subscribe to the information on YouTube and follow us on X, Instagram, TikTok, and check us out wherever you get your podcasts. I'm already excited for our next show on Monday. Have a great rest of your Friday and have a great weekend. Bye-bye for now.